Now, if you're a real estate investor, you probably already heard about the empowerment zone tax incentive. If not, you got to get up to speed. These are pretty cool. Now, what Congress and President Trump did back with the Tax Cuts and Jobs Act, that huge legislation passed at the end of 2017, they empowered the Treasury Department to create 4,700 zones, areas that really needed some economic boosting. And they worked with the governors to identify these areas. Now, the government's pretty crappy at going and improving areas. So what they decided is we're going to create some cool tax incentives to encourage real estate investors to go into these areas and buy properties and improve them. It's going to hopefully make our country a better place. Well, I've got 5 strategies you need to know about in regards to this legislation that could really help boost your bottom line and help make America better again. Did I really say that? All right, let's get into it. Number 1, you get to defer the gain on the sale of a property when you invest in one of these opportunity zones. Think of it like a 1031 exchange. Some of you might be familiar with this. You sell a property, you buy a new one of equal or greater value, you don't pay the tax. You defer the gain until you sell the second property. You can sell 3 and buy 1, sell 1 and buy 3 or more. I've got other videos on YouTube on 1031 exchanges. Well, the opportunity zone works like this, only it's better. You don't have to buy a new property of equal or greater value. All you have to do is invest the gain. So let's say you sell a property for 200 grand, but the gain was $50,000. You bought it for 150, you sold it for 200, keeping it simple. So all you have to do is invest the $50,000 in the opportunity zone and you don't pay any tax. You can defer the gain. Number 2, you can take any capital gain and use it in this strategy. That's right. You could sell stock in your portfolio in Wall Street, for lack of a better word, and you've got this capital gain from the sale of stock, which under a 1031 exchange, you could never turn around and just put in real estate and exclude the gain. But here you can. So let's say you sold that $200,000 worth of stock and you have a $50,000 gain again. Well, all you have to do is invest that $50,000 in an opportunity zone property and no tax. You get to defer that on even a stock gain. Number 3, it even gets better. The gain is reduced over time. So the longer you hold the property, the gain is reduced as an incentive for you to keep that property and maintain it and make that area better, right? This is the opportunity zone. Now, this is where it gets complicated too. Down in the information below, our law firms produce 3 different articles, part 1, 2, 3, on the opportunity zone. Please click on those articles to read more and get more of the details. Now, as many of you know, I'm a CPA and attorney and a partner in a law firm and accounting firm, and we help clients all over the country with their tax and legal strategies when it comes to real estate or small business in general. So I'm hoping that this video here might open the door for you learning more about the services we provide, because we love this stuff and we want to help you succeed better in your investing. Now, back to the point here. The gain is reduced over time. So what that means is if you hold the property at least 5 years, the gain is reduced by 10%. So you took that $50,000, you bought into an opportunity zone. Now the gain goes down by 10%, that's $5,000. So the taxable gain is now $45,000. Boom. Now, if you hold it at least 7 years, the gain is reduced by another 5%. So now 15% of that gain is excluded forever. You just got a reduction in the capital gain. So what this means is by 2026, you've got to pay the tax. If you hold it at least those 7 years, by 2026, you actually pay the tax at that point. So your gain is deferred, not until you sell the property. It's up until 2026. If you hold it that long, the gain is reduced by 15%, and then you would claim the gain on your tax return for your 2026, probably filing it by April of 2017. So 2027, sorry. Like I said, a little complicated. You want to read up a little bit, but this is pretty cool. Again, that gain is excluded. Number 4, it even gets better. I probably should throw in some Ginsu knives, right? Some of you are too young to know what that means, but some of you might appreciate that. Anyway, so here's how it gets better. There is a complete exclusion on appreciation from taxes. Okay, let me explain. If you hold the property at least 10 years and then sell the property, Under this legislation, you pay no tax on the appreciation from the date you bought the Opportunity Zone property. You hold it 10 years. If the property went up another 100 grand, you pay zero tax on any appreciation if you hold it at least 10 years. What? Right? Pretty cool. So in 2026, you get to exclude your gain, you claim your capital gain, you got a deferral and a reduction. You hold it 3 more years for at least 10 years, and then you decide to sell it. Any appreciation on the increase in value, tax-free. Oh, pretty cool. Now, number 5 strategy, and this is important to highlight even in this Opportunity Zone strategy. Make sure you implement your LLC, your limited liability company, in the strategy. It's not going to screw up the Opportunity Zone's incentive. It's not going to create a due on sale clause with any mortgage. As soon as you buy this property in the Opportunity Zone, get it in an LLC. These are tending to be, of course, dilapidated areas. You're going to create great cash flow, but you got to be careful. This could be an asset protection issue that you've got to take seriously. Make sure you get that property in an LLC. And folks, do your company maintenance. This just isn't one form at the state. Oh, it was $50, I'm good to go. Those LLCs are getting pierced more and more with lawsuits around the country because people aren't doing their minutes, they're not maintaining an operating agreement, separate checking. We have a company maintenance program at our office. It's only $150 a year to do all these pieces and parts to make sure your LLC is solid. And also, this is not just a one click on LegalZoom. Please, if you have any questions on this, our law firm sets up any LLC in any state for $800, and you get a consultation with a real tax lawyer for an hour, tailoring it to your plan. So get the LLC in place. It makes your incentive even better because you're protecting yourself from the legal side while you're also getting the tax benefits. So you get the whole package. In summary, I'm a firm believer in diversifying all of these strategies to get to your path to financial freedom. It's exciting. Real estate should be a part of your equation, just like some Wall Street pieces and parts and insurance and your own home and your business. I want you to have a well-diversified portfolio of investments in and outside of Wall Street. They're going to help you better live your American dream. Now, this Opportunity Zone is something that could be a huge help in that process. Thanks so much for watching that video, and I want to be your source for tax and legal strategies. It's hard enough to live the American dream without being out on the web, on Google, trying to find answers to complex questions and just clicking a mouse hoping you got it right. My team and I want to be a huge resource to you. The law firm, accounting firm, my education resources on my site. Please continue to follow these strategies. I know they'll save you thousands. Now, click here if you want to be a part of my newsletter. It's awesome. Weekly updates and deadlines and strategies and tips. Also, subscribe to my YouTube channel. You'll love it. And make sure to click the bell icon so you get a little ping whenever there's a new video. And finally, check out my site, markjkohler.com, with all sorts of videos, probably 70 plus videos, 30 plus hours of content that'll save you thousands.